Ever wonder why you can't just copy the trades of the richest hedge funds and get rich yourself? It seems simple, but it's a trap. Think of these funds like financial submarines. They move silently through the market's depths, and by the time you spot a ripple on the surface, they're miles away, along with the treasure. Today we're showing you the legal loopholes and secret tactics they use to keep their strategies locked down. This isn't just about privacy. It's a system designed to hide an advantage worth more than gold. The most powerful secret isn't a trading algorithm, it's a legal one. Hedge funds are usually set up as private partnerships, which lets them dodge most disclosure rules. Unlike a mutual fund, you can't just buy shares of Citadel or Renaissance Technologies. To get in, you have to be an accredited investor, a term for someone with a net worth over $1 million or a very high, steady income. This rule is the ultimate gatekeeper. By dealing only with wealthy, sophisticated people, hedge funds can skip the strict rules of the Investment Company Act of 1940. That's the law forcing mutual funds to disclose all their holdings and calculate their value daily. Hedge funds, governed by private contracts, do almost none of that. A mutual fund is a public bus with a fixed route. A hedge fund is a private jet that flies wherever it wants, with only a select few on board. The 13F filing is completely blind to the most important parts of a hedge fund strategy. The most obvious blind spot is short positions. Hedge funds are famous for their long-short strategies, buying stocks they love and shorting stocks they hate, allowing them to make money in any market. George Soros' legendary 1992 short against the British pound, which broke the Bank of England, would never appear on a 13F. Hedge funds are also masters of derivatives, options, futures, and swaps. A 13F might show that a fund bought a stock, but it won't show the massive put option they also bought as insurance in case the stock crashes. Furthermore, 13Fs don't cover other assets like foreign government bonds, currencies, or private startup investments. For global macro funds like Bridgewater Associates, a 13F is like judging an airline's global routes by only seeing one airport's shuttle bus schedule. Even if 13F filings showed everything, copying them would still be a terrible idea. The reason is time. The SEC gives funds 45 days after a quarter ends to file their 13F. A trade made on day one might not be public for over 4 months. In finance, that's an eternity. It's like using yesterday's newspaper to bet on today's horse race. High-frequency funds like Citadel might hold a stock for minutes or even milliseconds. By the time you see that a fund bought a stock, they may have already sold it. The retail investor who buys the old news often just becomes the fund's exit strategy. The 13F tells you where the submarine was. By the time you see the ripple, the ship is long gone. Beyond legal walls and hidden trades, hedge funds guard their strategies with extreme paranoia. Their methods are legally protected intellectual property, classified as a trade secret. This was highlighted in the 2024 legal battle between Jane Street and Millennium Management. Jane Street sued, claiming 2 former traders stole a secret trading strategy that had reportedly made over $1 billion. The case, which eventually settled out of court, confirmed that a single strategy can be a legally protected secret worth billions. To protect these secrets, funds use ironclad NDAs and non-compete clauses. They spend millions on cybersecurity and silo internal information, so no single employee knows the whole strategy. They also spend a fortune on alternative data, from satellite images of oil tankers to anonymized credit card data, to get an information edge that's impossible for the public to replicate. So, can hedge funds keep their billion-dollar secrets? Yes. The system is built for it. They use private legal structures, invisible trades, and time delays to their advantage, all while protecting their strategies like state secrets. The dream of copying the smart money is a fantasy. The data is incomplete, old, and often designed to mislead. The next time you see a headline about an investor's latest picks, remember you're only seeing the ripple. The real treasure is hidden deep beneath the surface. If you found this look into high finance valuable, hit the like button and subscribe, and let us know in the comments. Do you think this level of secrecy is fair, or should hedge funds be forced to be more transparent?